So we are here.
Yeah. Right. Good morning, good afternoon, and good evening, everyone. Welcome back to another episode of the Trading Vault. I'm delighted today to be joined by a very special guest, another fellow VT Markets colleague, Eduardo Romero. Welcome to the Trading Vault, Eduardo.
Hi
Um,
Ross, it's great to be here with you, and thank you and welcome everyone.
Yeah, exactly. So yeah, we're delighted to have you here, Eduardo. Like obviously giving us your experience and expertise from a LATAM perspective as well. So this trading vault episode is very different to the other ones. The other ones have been very much sort of educa well, this is still hopefully going to be educational, but very much topics based or live trading sessions. We are going today to give both of our journeys from obviously we have experiences in different regions, but hopefully one thing that I've found in my trading career is that successful traders, whilst they may look at the market slightly differently, there are also some very strong similarities and stuff as well. So hopefully you can see that some of the similarities you can take away, maybe implement into your trading, but also see how different traders look at the markets from different perspectives as well. So we're going to start off just introducing ourselves a little bit. We're going to talk about our journey through trading, how we got to where we got to. I know Eduardo's is and my journeys are slightly different. And then we're going to jump into some charts. Okay, so we're gonna both of us are going to share our screens. We're going to analyze the charts so you can get some ideas on how we look at the markets. And again, we've done this previously, and I think you'll agree with me, Eduardo, that whilst there are some very big differences between the way that we trade and stuff like that, there was also some similarities in terms of the way that we approach the markets and stuff as well.
Yeah, totally agree. So
Yeah.
let's get on it, no? Right?
Yeah, exactly. So we're going to look at gold. We know that's a very like an instrument that a lot of people trade. Eduardo is an expert trader in gold, and I do trade gold as well. So we felt it would be a good option to look at. And then we will open up for some question and answers at the end as well. So as always, if you'd like to introduce yourself in the chat, it'd be great to know where you're coming in from. Great to know your level of expertise. Please do fire away with any questions that you have. As always, we'll try and answer some more relevant questions as we go, but we'll try and save most of them to the end and do the Q&A at the end so we can keep this running as well. So um, without further ado, like I say, so this webinar is called "The Trading Perspectives: How Two Traders See the Same Market." As I say, we've already gone through the structure and how we're going to approach this. So if first of all I give you a bit about my journey. Now, obviously from the Trading Vault, other ones you know a bit about basic information about my journey and what I do and where and what I've done in the past. But I thought going into a bit more detail as well about that journey. So um, I am VT Markets Global Operations Strategy Lead, so it's my role to provide high-level educational content for VT Markets clients. It's also my role to represent them in media and provide commentary and analysis for like using my expert experience in the markets. But I haven't always been that expert. I left school when I was 18 and, I started in sort of back office settlements. That was 25 years ago now. I quickly made it known that I wanted to become a trader. And I got what was then my FSA license. It's now called the FCA. It was the UK regulatory body. I passed my exams. And I very quickly got onto a desk where I was a junior on the desk and quite quickly worked my way through. So I worked in emerging market equity derivatives, which is a fancy name for indices, basically. I was trading South African index futures and options, so the South African version of the S&P 500 or the Dow Jones. And that really was sort of where I spent a decade of my career. So I was working with South African institutions and pension funds. and basically facilitating and so my big clients were the likes of Goldman Sachs, Deutsche Bank, all the household investment banks. Um, I spent that led me to Hong Kong, and I spent sort of a few years in Hong Kong, giving me exposure to sort of Asian markets and the Asian sort of clients. And before moving back to London, and I decided that I wanted a little bit more freedom, a little bit more flexibility in my life, and that's where I decided that I wanted to become an independent trader, basically trading my own funds. That was back in 2014. And that is sort of like, I guess, which then led me on to my path today. So I started trading my own funds. I worked with some education companies, acting as a mentor. But also through those, I got connections to be able to trade funds to trade for some funds, and that sort of helped me produce the capital I needed to make this like a full-time income as well. And that's sort of really where I got to where I am today. So I'm also an investment manager for a fund. And I provide education through my online education company as well called Keyzone Traders. So that's sort of my journey in sort of a couple of minutes. But as you can see, I haven't always been an independent trader. I've got background from the institutional side, but also from the independent side as well. So yeah, any questions or anything like that for me from you guys or from Eduardo in terms of that journey? Can you hear me, Eduardo? Okay.
Yeah, yeah, I can hear you. I
Yeah,
can
yeah,
hear you. I can hear you. So,
yeah.
sorry.
Cool.
Yeah, sorry. I thought that you were asking to the audience.
Yeah,
Sorry.
yeah, but yeah, or if you have any questions as well, really, I
Yeah.
guess.
Well, yes. I would like to ask you something because it's very interesting that you started being kind of an institutional trader. So
Mhm.
I would like to know a little bit about your transition about from institutional to actually a retail trader, as you know, all our audience is
Yeah.
doing trading by themselves, you know?
Yeah, no, exactly, and I think like the transition was probably a lot more difficult. I think there was some real strong foundations that sort of the institutional side gave me, more about understanding risks and sort of like expectations within the market. I think that's one of the things that really helped me make that transition. But there were like it was still a very steep learning curve, like because I had to re-educate myself on how to look at the markets when I was working in London and Hong Kong. I had like access to sort of institutional order flows. So I had to try and I lost all of that information when I was actually trading for myself. So it was about having to read the markets in a slightly different way. And I think the biggest thing was also mindset, right? So
Yeah.
society teaches us that we need to be productive when we go, like, you go to work and you need to be checking emails. You need to be active to be actually be productive at work. Where actually, as a trader, sometimes the best thing you can do for your work or for your account is to not trade at all and not really do anything. So it was getting around that sort of mindset. As well, and then also, you know just again an emotional and mindset point of view, the way that again, even when I was working in London and for institutions there, like I would get salaried at the end of the month no matter what the market's done. Whereas as an
Yeah.
independent trader, I don't have the luxury of having like a consistent income. So it's just about trying to manage your expectations and stuff around that. So I think those were the biggest challenges that I faced with the transition. But I think there were certainly some things that I learned and I could take on from being in that sort of situation to take into being an independent trader as well. And Krishna,
Good.
yeah, exactly. So Krishna says less is more often in trade. And actually, I was chatting to someone today, and actually, all the data suggests that there's a big correlation between the number of trades taken and the profitability of a trader. So the more trades a trader takes, the less profitable they become, sort of thing. So there's a very big correlation in that. So yeah, less is definitely more
Yeah.
in trading. I don't know if you
Yeah,
find that as
that's a
well,
fact.
Eduardo.
Yeah,
Yeah,
that's a fact. A few days ago, I was doing a kind of a resume of this year's trades, and I was checking that the months that I did the less trades were the most profitable. But
yeah,
we are in the markets, and we are analyzing every day for all of our clients. So
yeah,
sometimes when you see something, you have to. If you see something on the chart that have worked before, probably
yeah.
we have the chances to work again. So you trade.
Yeah, 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 exactly. I mean, there is that sort of fine balance, I guess, as well, isn't it? Between like, um, obviously, there is no picture perfect, right? There's picture perfect trades that look good, but just because they look good doesn't mean to say they're all necessarily always going to be a winner. So it's about having the
Yeah,
experience and learning how to identify the setup and then execute that setup. Whether or not it's a winner or lose, it doesn't like the actual whether it's
exactly.
going to win or lose is sort of like not is not the decision. That's not what you base your decision on. You base your decision on whether that setup is correct as part of your plan. If you analyze the market and the setup is there, then you have to execute that edge. Like whether the trade wins or loses, in terms of like the long term is sort of irrelevant because the distribution, whether a trade wins or loses, is completely random. So we just have to
Yeah, totally.
continuously execute that edge. Um,
Yeah,
so
yeah,
anyway,
yeah.
guys, that's sort of enough about me, I guess. Eduardo, if I hand the floor to you, if you can tell us a little bit about your journey and your role here and the way that you trade, that'd be great.
Yeah, for sure. And thanks, Ross. Well, first of all, I have like 1 year and a half collaborating here in BT Markets. And my journey started like 14 years ago, give it or take. Uh, I was interested in markets when I was young. I still look young a little bit, but I'm 37, so I'm not so that young. And and my
You're still
first
younger than
approach
me, Eduardo.
to yeah, well, but above 30 is kind of difficult. My trading journey started when I was actually a poker player. So when I went into a big drawdown several years ago, I need to start to find something, another way of living. So in an employment theory, I went there. I see some charts. I correlated it to the way that I was analyzing all my hands, and that was my first approach. I started to working in a broker, which come from Hong Kong. I don't know if it still exists. I remember that the name was Tanrich International, and they were looking to get clients that invest a kind of $25,000 to trade Forex. But it was like I think that it was like a shady business because I don't know. It was not regulated, and it was here in Mexico. So
Yeah,
they were representing something that from Hong Kong in Mexico, but with no regulation and stuff like that. So that was like my first approach. But there I started like all the basis from technical analysis. No. So after a few weeks, I realized that I was not gonna do money in the short term, and I was needing money. So I just like put a pause on there, but I keep learning on my own, and then on 2017 I start trading my own money with the kind of knowledge, really basic, and on that time you could find on YouTube some basic stuff. There were a lot of groups on Telegram, but
hmm,
a lot of scams. And today I think that have not changed a lot. But
yeah,
that kind of information started to get me the approach to good strategies, some other ones that were not really good. And from that part, I started to filter good traders, bad traders, good mentors, bad mentors, the multi-level business as well, to try
yeah,
to not fall into that. And you know, with a test and fail, I start to discover what was my real way of trading. I discovered a guy that was trading GBP, JPY, and that gave me a really big or several good lessons because I start trading GBP, JPY, which is very volatile on my own, and it was during the Brexit, you know.
Yeah,
So
yeah, I know
so
very well.
yeah, yeah, you're there.
Yeah,
And suddenly I was starting to look at the discussions that happening on the parliament, and I started realizing that when a site said something, the GBP moved to another to a way, and when the other part were replying, the price went to another direction, and that's my way to that's the way that I start doing some scalping, but. That's my first experience doing trading with my own money. Obviously, I lost everything. I lost everything. And back then, I started to realize that I needed to study in a very focused way. So I committed myself fully into this. And in 2019, uh, almost for October, a friend of mine shared me like an open position for a job on a CFDs broker. I'm not gonna say the name, but it's a good one. And I started working there. So because I had experience doing trading, I had several knowledge on the markets, and I'm like an addict of the information.
yeah,
I became the analyst. I was
mhm,
developing business, then I become the analyst, and also I was doing the training for all the new commerce to the new hires for the broker. And I worked there for 4 years, and being inside the business, the industry, gave me the chance to realize what was the good practice, and what are the good strategies that actually work on the markets. Being here on the industry allows you to meet a wide range of people, a wide range of traders. So with all the exchange of ideas, uh, that's yes or yes gonna enrich yourself,
yeah,
so being analyst in there, I started to making some good relations, and then started to developing my own strategies. And from I think like 4 years, yeah, from 2022 to date, I'm making money on markets, and what I do here in BT Markets is to share my knowledge and try to share also my strategies, which sometimes are very are not like the traditional one, like you only have to do scalping or you only have to do swing, it's kind
yeah,
of a mixture of everything, but
yeah,
mixed with the fundamental data. So this have helped me to to be also like an opinion leader
mhm,
here in Latam. And I've been
yeah,
mentioned in some media like El Financiero, which is a Mexican newspaper, very, very good one. The Economist, or El Economista, which will be in Spanish. And
yeah,
also, I had some participations on Bloomberg Middle East, which was one of my great achievements as an analyst.
yeah,
And also, I have the experience or the chance to give some professional classes to for two universities here in Mexico. One of them is
yeah,
one of the most prestige universities, private college or private universities. So yeah, that's kind of the resume of the path of
yeah,
in my career as a trader, as an analyst. So
yeah.
so yeah,
I think, yeah,
yeah,
I think it's interesting because it's funny you say that you started as a poker player because I've actually I know from my experience of talking to a lot of traders and stuff, like good poker players generally speaking make good traders, and the reason is because you're always thinking in probabilities, right? Which is exactly how you should
exactly.
see the market, and it goes back to what we said earlier on that if you see if you see a good setup, you have to trade the setup. So if you're dealt, I don't know if we've got any poker players in here, but if you're dealt like two aces as your hand, you've got to effectively play that hand because the probability is in your favor. That doesn't necessarily mean that you're guaranteed to win that hand, but you have to play it because the probabilities are stacked in your favor. And it's the same when we see something a setup like a really good setup in our trading. We have to execute that trade. There's no guarantee that that trade's going to win, but we have to execute it because the edge is in our favor for it to play out. And it's not putting again, it's interesting some things that you said about you was analyzing the data of your hands. We need to analyze the data of our trades equally to make sure that we are doing the same thing. So there's some very similar skill sets between being a good poker player and being a good trader as well, which is something very very interesting. And also I
Yeah.
like. I mean, I don't know if you know many other poker players that are good traders as well, or have you come across that yourself?
Yeah, I know some poker players that now they are not trading poker. They are more into crypto and also trading CFDs, and
Yeah,
they are not like the big performers, but they are good at it.
yeah,
So yeah,
yeah,
it has big similarities, and also on the mindset, you have as you said, it's all about to find the edges and take advantage of them because that's
yeah.
the only way to make money on this.
Yeah, and also like it's again like listening to your journey as well. It's sort of like it took you several years to sort of like to make the breakthrough to actually start making money from trading. You spoke about sort of like the having to go through bad period. You said that you blew up an account and you lost the things. And I think this is again this
Several
is
accounts.
yeah, this is quite a natural journey that a lot of traders go through, and it is the one thing that I always sort of liken it to is like I use try and use analogies and stuff, and it's like if you want to become elite at anything, whether it's like a heart surgeon or a professional footballer or whatever, like a professional athlete, you don't just sit there and say that's what I'm going to be, and then you get there. Like there's always going to be knocks along the road. There's always going to be bumps. It's about giving yourself the right education and doing it and approaching it in the right way to be able to get to the ultimate goal as well. So I think again, you've been doing this for 14 years. I've been doing it for effectively 24, 25 years. And that doesn't mean to say it's necessarily always been easy. We didn't get to where we are straight away. We had again, like I started off in sort of like settlements. I had to pass exams and things like that, and work your way through. And likewise with yourself, you had to work your way through to get to that point where you then have the experience and the knowledge to then become profitable. So it's yeah, again, that's the sort of similarities, I guess, where although the pathways are different, there are sort of similarities in terms of the actual fundamental journey sort of thing.
Yeah, yeah, and also I think that both of our stories is a good example for all of our audience and the clients to know that, for example, we have like several years on this, but the advantage that all of you attendees here on this webinar have is that you can take advantage of our knowledge to shorten your learning curve, and that will
It,
help you to be profitable in a short time, you know?
Exactly. I think that's that like if you can see those similarities in terms of our journeys, even though the journeys are different, and even I mean I know we've analysed charts together before as well, and there's certainly some differences, but there are also some real basic fundamentals and similarities, which if you can take that away, you put in the right processes in place and the right sort of fundamentals to shorten that journey sort of thing. So look, we're going to get into some charts in a moment. So just wanted to go through a couple of sort of ask a couple of questions, if that's okay, Eduardo, um, just to sort of like give
For
some
sure.
more background and stuff. I mean, what do you think is the most important thing that aspiring traders should focus on to becoming a successful trader?
The most important thing I think is the mindset because well, you can learn all the technical analysis, you can learn all the fundamentals, but being trading with your own money um, puts you on on an emotional edge, which is very, very, very difficult to control, to master.
Yeah.
and probably we will never gonna master all of our emotions because we are humans. But the thing is that you have to look at the market, at the chart, at the numbers as what it is. They are data. The numbers are called, and you have to be called on the market. So try to mastering your mindset will help you to understand all the ups and downs that we expose ourselves every day, and that will allows you to to have a better management of what you're doing with your money, you know?
Yeah, I think you're 100% right. And I think, like, so people always ask me about sort of like, obviously, I dealt with much bigger sums of money when I was trading in London than I do for my own sort of capital. But
Yeah,
it was much easier to do it for them because it wasn't my own money. Because as humans, we have this sort of like natural attachment to money. So yeah, like, even small sums of money when you're very first starting out, you're going to experience those emotions, right? And you also pointed out, I think you said there that, like, we can't, as humans, we will always feel emotional because that is
yeah,
just part of our makeup, and it's about learning how to develop a way whereby, whilst we feel those emotions, we don't let them control our and dictate our decision making into our trading, and reflect into our trading. So yeah, totally agree. I think also just sort of like expectations, having realistic expectations
yeah.
around what you can achieve in trading, and that being okay and accepting that as well is vital. And again, that sort of comes down to a mindset type thing.
Yeah, totally. And as you say, just to sum a little bit, for example, it's like there's a lot of profitable traders on demo account,
Yeah, yeah,
but
exactly. Yeah. But they can't translate it because as soon as the emotions come in, it throws in that sort of that curveball, and it doesn't replicate the same environment. So yeah, 100. And like you say, and there's like there is an argument to spend some time in sort of like a simulated environment because it allows you to build some of those skill sets. But that doesn't make you a successful, profitable trader. Like, to be able
exactly.
to actually make money from trading, you have to build and you have to trade live capital, and then you have to scale up your account because it throws in certain emotional variables that you just can't replicate in any other environment than when you're trading real money, basically.
Yeah, 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 yeah,
Yeah.
totally.
Cool. Well, look, let's
Good.
get some let's jump into some charts. If you wanted to go through first, Eduardo. So if you want to talk about sort of like the time frames that you trade, the instruments you trade, how you sort of approach it in terms of sort of technicals and fundamentals. If I stop sharing my screen so that you can share yours,
Yeah, for
um,
sure.
uh,
Let's
and,
get
and
on.
yeah, and then we'll go from there. And then, so if you go through yours, and then we'll look at the sort of same sort of charts and the time frames that I look on.
Good. Well, so are you okay with if we do the gold?
Yes, yeah, 100%. Let's
Yeah.
stick with gold. I know a lot of people trade gold, so I think it's one that a lot of people like to look at. So let's stick with gold for now.
Yeah, and actually it's a very interesting asset. And well, actually, not only this year, as you all know, or probably if you don't know, let me share you something. If we start signaling the start of the year, which is on the 2nd of January, and we go to where the price is right now, we have a growth of 64% of growth on gold, which is very interesting because it's an asset that doesn't give, how you say it? It doesn't pay like revenue.
The yield, the yield is you talking about?
Yeah, 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 yeah. Sorry, sometimes because English is not my native language. Some words don't come often, but well. So first of all, when I start analyzing gold or any other asset, what I do is try to look on the higher time frames, which is something that everyone should do because it helps you to see where is the price action and where is the sentiment. So, as we all know and we can see here, we have an uptrend. So that's something that we can deny. But for to try to be more into what can I do today, we have to understand that the market behaves. because for different factors, and one of it, and one of the most important, is the market sentiment of the investor sentiment. So, as you know, the gold has been moving up because at the start of the year we have this Mr. Donald Trump getting into the government of the United States, and then he started or restarted his war against China with the tariff war and everything. So the practically all the investors see that as a threat, and that makes the gold very attractive. And then Trump was starting to say something about lower interest rates. And because we started to see the inflation in the US getting a little bit slower, the market started to try to capitalize these movements, and the price of gold started to move to the upside for this combination of factors. And I want to make something like a little pause here, because from April to August, we we reach for like four times the what in that time was the all-time highs, around 3,500 dollars per ounce, and then on the 20 around the 22 of August, almost like this,
Mhm.
Wednesday were Friday, 22nd of August. Mr. Jerome Powell, the president of the Fed, of the Federal Reserve of the United States, he told that they were starting to cut rates. He didn't mention it like as a fact, but he opened the door, and from that day, the gold did the best rally that we have seen in, I don't know, probably 12 years or something like that. As you see, guys, we were reaching all-time highs like every day, almost every day, and taking the price into what just happened in the short term, we can see that the price reached 4,378 USD per ounce. And then we had a big correction of around the 10%, a little, I think it's a little bit like 11% of correction. And from that part, we can start to putting like some interesting levels, which is like this. Let's call it support, to try to be on the basics. But it will depends also on what you're seeing on the trade, because this area we can name it also as a discount zone, or probably a liquidity area, which on this date, on October 13th, which also was my birthday, the gold started to
Any
move
other
up
return?
again, and then and then we see like a continuation of try to retest this level, and then a move to the upside again. And from this point on the 4,000 USD, we can see that the market also respected this area, which and I will gonna go to a lower time frame around here. We can see that it was like a resistance and then becomes a support. This is something very basic, and that's like a rule that I invite you all attendees to write. Uh, the most part of the time, a support becomes a resist. A support is have a breakout, it will become a resistance, and if a resistance is have a breakout, it will become a support. It happens a lot of times, so it's kind of a trick that you can take there. And from that part, I can see that we have a move to the upside, and then we are here. So now that I have like two several levels, and I have the all-time high, which is here, we can also realize that the price have trying to get into this level the last two days, actually. No, like we are on Tuesday, right? So it was Thursday, Friday, no, Friday, Monday, and today we are close to it. So it's time to get into a lower time frame, probably 4 hours, just to check that we also have some intraday levels. So here is where we can start to try to see where to trade. So now these levels from around here, it will only gonna work for me as as a level that I have in there, but I don't think that is going to come easy to that way. But I have to look what is the reactions, the lovely reactions that the price have been done. So, for example, we can see that in this part, in this area, in 4,178, around this area, we have also like a support zone or a liquidity zone or a discount zone. And from that part, we can see that in this area, we can draw practically a some price section, which we can name it as a reaccumulation. You know why? Because on this part, after the correction, we see that the price started to move into these areas around 3,900 and $4,000, and from this part the price start to moving up. So when the price is on a trend and then start to getting like in to start getting into a new range, and the price then do a a breakout to the upside, we can name it as a reaccumulation, which is just a part where the market was trying to get the most value of the true value of the gold. And with the combination of the data, the price start to, or the market start to move where to the areas where they think that the price is have to be. So for this part, we have the reaccumulation, then a breakout, and then we can see that also on last Friday, actually, the price after reaching new the all-time highs levels, the price did a great correction, and this area we see a big rejection, and that give us, like, the um, the clear path to look into a lower time frame. So going to the 1 hour time frame, we see that the same levels are being respected, and from today we can see that yesterday price again reach the all-time high area and then start to do a little bit of a correction. And this is where sometimes people start to confuse, because they think, okay, it's on all-time high area, probably I have to look for more sales, but you can't ignore what is the main trend, which is an uptrend on gold. And also you have to check also the season that we are trading. And right now we actually on the last days of the year, we're on December, and I want to share you. I want to share you another tip, which is when you trade the markets, and before entering a trade, you have to understand the sentiment. And also, besides the sentiment, you have to look the market as it was like an auction, and zooming to that, you have to see the seasonality. So if we are in the last days of the year, the chances of getting to new all-time highs is not impossible, but probably is not gonna happen on these last years. Probably could be, but probably not. So what we can see here is that on these last days, we have like a new range of price, and you can check it here on 4,000 to 4,258 around. And we have like a new level that was respected a few hours ago on the 4,275 dollars per ounce area. So we are kind of repeating this price action that we saw here. So we can see, or we can think, that we are in a reaccumulation. So this could give us some intraday opportunities of trading in range. So that represents, or that means that we can start to looking for some sales on this area, because it's an all-time high area. We have fresh data which supports that the price of gold gonna come up, but we are not having or we are not so close from the dates that the data release could give us like the breakout. So probably the market we could start reaccumulating again. So we have to look around these areas like 4,275 and 4,250 around to look for some buys, try to get, around 300 to 40 pips because gold is like the average of pips that it moves daily. So if you, for example, if you calculate, I have calculated that, for example, these movements to these corrections were around 500 pips. So if you can only take like 300 pips, you will be getting money from the market, but you have to be patient and let the price comes to the levels where is discount and where the market want to sell, So that's
Yeah.
one of the approaches that I do. And when I try to find an entry, I look into, for example, 15 minutes chart to try to see, for example, something like this. After this correction of yesterday, we can see that the Asian session that were like around here was a continuation of the movement. And then here on the price that I signaled you a few moments ago, the price did a rejection and then started to try to keep falling down, but we can see like the strength of the sellers is missing or is disappearing, and then when the price do this, that is a clear sign that someone is taking control again, which is the buyers, and it actually is very near of the areas that we have signaled. If I uh, do this, we can see that on the correction that the price did on Friday, these were also the area where a lot of volatility and a lot of volume came in. And I'm saying
Yeah.
that only with price action. I'm not putting any indicators. We can put probably some volume profile, but I don't want to make it like,
Too
tricky
complicated.
or,
Yeah.
or difficult. I don't want to
Yeah.
complicate things, but only looking at price action, we can see what are the levels that we have to be looking each day. So at least from today to Thursday, I think that the price will gonna keep moving on this range. And for
Mhm.
example, and actually, if we can see, we have some rejections from sellers on this area on 4,334. This was a reaction that came because of the data release of today. We had the non-farm payrolls of the U.S. and also the unemployment rate, which also were data that help the Shao USD, the gold, to get again from the upside. No, so
Yeah.
on my part, for example, I did a trade here, and I want to share it very quick. It's a very short trade. Is this one I entered on? Where is the price? On 4,297. Is
Mhm.
very, very small trade.
Mhm.
And yeah, we are running. So this is what you can look and try to enter. Or for example, that's like an intraday day. But if you have the knowledge and you can see what the market is doing, for example, this is a trade that I have opened from $4,214, and this is like a swing trade. It's gonna remain open until I don't know when, until the market tell me that the gold is not gonna keep
Yeah.
going up.
Yeah.
But what I try to sell to tell and to share is that you can mix several styles, but analyzing, you have to be clear on what is the market sentiment, which right now we know on gold that is bullish. There is a bullish bias. Uh, you can, for example, if you are trading on lower on big time frames, you can do some swing trading. But also, if you wanna have like a mix of strategies, you can start to looking for some intraday trades, probably 300 pips per trade or 200 pips per trade, and only get in, get out, and could you say probably three to five trades per day probably is a good is a good number of trades, I think, and put like a limit on how many losses you can take. For
Yeah.
example, on my own, I can only afford four losses per trade per day. Sorry. So yeah, that's kind of the way that I analyze the market and how I do some kind of trading, only based on
Yeah.
price action. But I also do look for more things, you know.
Yeah, I think so. And I mean, you make a good point there that, like, I'm a big believer in putting downside risks, so putting limits on the number of trades you can lose. I'm not so I know some people put limits on the number of trades they can win, or like profit targets. I'm not a big fan of those myself, because I think if the market is working in your favor, why would you limit that edge? I think, trading is all about managing your risk. So definitely have
Yeah.
downside limits, definitely have the number of trades that you can lose. I think that, because that's capital preservation, protecting your capital, which is rule 101 of being a trader. But I'm not personally a big fan of like putting profit targets and going, okay, well, I've hit my profit target for the day. Now I'm going to walk away, because actually any trader really is looking at their performance over the course of months, quarters, years, not on a particular day. So I don't know if you agree with that, Eduardo, but yeah, that would be my opinion on it.
Yeah, yeah, I agree, and that's a very interesting point. Because if the market conditions are favorable, you have to you have to let the trade run, and
Yeah,
that's a big part of what we were saying a few moments ago. As a trader or as a retail trader, you have to try to master your mindset,
yeah,
because some people, for example, if I see these corrections here on the price of gold, some people probably we're going to start thinking, hey, it's going to fall down again, and I have to take my profits right now. But no,
yeah,
you have to respect. For example, my intraday idea for this day
yeah,
is this: I gonna trade the range, and
yeah,
until price gets into here, I
yeah,
will close, or probably I will check if the price action, or if the sentiment, or if the volume, a lot of stuff is um, having this how can I say that when everything is zooming.
we call it confluence, like
Yeah, yeah,
confluence, like,
confluence. Yeah,
yeah,
confluence.
yeah,
Yeah,
yeah, yeah,
confluence
yeah, yeah,
is having confluence. And for example, if I see that the price have big chances of probably break this, I will still be in the trade, because
yeah.
I enter in a zone that I think is good.
Yeah, and
But
I think
the,
so. Sorry, keep going.
sorry, just to finish, it's something that it takes time.
Mhm.
um, like I like to say it like flight hours. As a pilot,
Yeah,
they
yeah,
have flight hours. So on the train on trading is the same. You have to look the charts a lot of big times, or have to be on the charts, looking at studying, and our brains, yeah, are very very capable of start to figuring out some patterns. And when you see
yeah.
that, you have to do the trade.
Yeah, yeah, exactly. There's some really good things that actually, like, I don't know if you saw me smiling through some of your analysis there, but it was like some of those levels that you were pointing out are exact levels that me and my clients have traded this week as well. So again, it just goes to show those similarities. And you make some good points. So obviously, you sort of sit there and say about, like, you see that price action and like not having to close it straight away. And again, I think having that sort of like the bigger picture context. This is a 15-minute chart. So if you sort of like start coming out of that trade due to two or three candles worth of price action, you're sort of like taking out a whole year's context, and you're
Yeah,
making an emotional decision based on 30 minutes worth of price action. And like,
yeah, yeah,
again, it's just getting people to understand those, like, you do need to understand a bigger picture. You need to understand the bias, and then have conviction and confidence in the trade that you're taking. So if it's okay, Eduardo, what I'll do is I'll share my screen.
for
I
sure.
don't think, yeah, I don't think I will need to spend too much time on mine, because, as I say, a lot of the
The
fundamentals actually,
levels.
yeah, are the same. And I just sort of go over a few things that you sort of said there as well. So this is the gold chart from this is on the daily chart. I mean, personally, I generally trade the 1 hour chart. So the way that I would look at it is like, okay, so I look at that chart, and as you quite rightly pointed out, through all the fundamental reasons that you mentioned, we're clearly in an uptrend. So therefore, I want to be focused on buys. That's my because you know if you're in an uptrend and you focus on buys, placing yourself with the momentum in the market. So my
Yeah.
idea with my general idea is to look for areas in the market which are good for buying opportunities. Now, again, you mentioned in your analysis about this area here. Um, around here. Like this was the breakout area, you know, how we had
Yeah.
multiple touches of that. Now, you also mentioned quite rightly, and this is sort of like one of the things that I base my trading and my analysis on, and my sort of like my theory behind the markets and my trading is. Um, Once an area of resistance which has several touches, so there's liquidity there. We know that for there to be liquidity there, institutions must have been selling in that area. We also know once we break out that the market is attracted to areas of liquidity because it wants to go to areas where it can facilitate trades. That's the primary function of any market, whether it be the financial
Yeah.
markets, whether it be a fruit and veg market, any market. It wants to match buyers and sellers. So that's what it wants to do. So whilst we haven't reached this area here yet, I know that potentially at some point the market will be attracted to this area. And I know that it's with the overall trend. Therefore, if it gets back into this area, I'm going to want to participate as a buyer because that's an obvious area of liquidity that is going to be supported.
Cla-
So again, it's an area that you identified earlier on. So whilst I don't trade off the daily time frame, that is something in terms of a general chart idea that I would look at. Now, if we actually move down some levels, again, you spoke about this area here, and this was actually an area that we did trade. And again, it's exactly the same idea. Okay, so
Yeah. Yeah.
you've got this area of accumulation. We know that the market is bullish in like overall context is bullish. We've got an area of resistance. The market breaks through that area, having had, and again, the market can only have these pushbacks if there's institutional liquidity there, because institutional liquidity
Hmm.
that moves the market. Okay, and we've got one touch here, we've got another touch here, we've got another touch here. Then it breaks through, holds it, and pushes higher. So as a trader, I'm sitting there thinking, okay, I've developed my higher time frame context. I know that I have a bullish bias. Therefore, I want to look for the best places to buy. That doesn't mean to say that I just buy because we've broken out. I have to, and you mentioned this in your analysis as well. I have to exercise the patience, and I have to wait for
Exactly.
the market to move back into the area that I identify before I execute the trade. Um, and again, so we've by as soon as we break out here, I've identified the area, and a lot of traders, what they will do when they see this really sort of bearish momentum,
Candles.
they again they will not execute that trade because they would say that those candles are far too strong. But again, what you're actually doing by making that decision at that point is you're placing an emotional emphasis on 2 hours worth of price action, and you're overriding a whole year's worth of price action. Like to sit there and like, or even if you sat there and say, you know, on the 4 hour chart, you're like, you know, this from this area here, end of October where we've been bullish again. Like you're discounting large chunks of price action based on just like a very small bit of data. But if you actually just look at the data itself and in isolation, you have got a really strong level where you know there's institutional liquidity and you're trading with the context of the overall market. So even in the face of a fairly sharp down move, where does the market stop? And it's not actually just at that resistance zone. It actually stops pretty much
Yeah, on the same price.
at that swing high there, almost to the pip, because that is where the last touch of liquidity was. So that sort of generally speaking is how I look. And again, whilst some of our entry points are slightly different, actually fundamentally what we're doing is still looking at the same. We're taking a higher time frame context to create a bias, and then we're looking for areas in the market that support that bias, and then we're both waiting for the market to come back into those areas before we then look to enter the trade next year. And again, I think you're taking real key fundamental processes that are very consistent together in terms of like that patience, waiting for the market to come to you before you execute. Some of the analysis might and the way we get there might be slightly different, but fundamentally there's some very strong similarities there as well.
Yeah, totally.
Um, so yeah, I mean that's sort of it, guys, in terms of the analysis and everything like that. I think we've still got sort of 5 minutes. We can. I'm not sure if we need to wrap this up or not. But if the guys, if you've got any questions or anything like that, please do let us know. Let me just share my other screen. Um,
I think we have some questions.
yeah. A question from Maria. Hi, guys. Thank you for sharing your knowledge and experience. These are really very precious for us. My question is how and where can anyone start studying for becoming a trader? If you exclude Telegram groups and non authorized academies, your opinion about prop firms and funded accounts. Thank you. So, um, I'll fill the. I mean, in terms of where can anyone start studying to become a trader? Well, I might be a bit biased, but the trading vault is a really good place to start. You know, I know
Yeah.
this is a more a discussion and a sort of topical talk, but we have provided multiple and we will continue in the new year to provide educational content. We provide, you know, how I just analyzed the charts there. You know, I go through that step by step process. So I believe the Trading Vault is a really good place to start with your trading journey. As a VT Markets client, you get access to these. I'm sure the guys can post the previous recordings as well to start. There, but that would be the best place to start for me. Um, I'll let you take this one if you want, Eduardo. What's your take on buying real gold and coins, especially?
Well, I think it's a really good way to save in money, just for saving.
Mhm.
But I think that also if you want to buy, for example, gold coins, I will invite you to be patient and try to to wait that the gold comes a little bit down
Yeah,
because we are on all-time highs right now, and as the bias is that the price is gonna go up, I would prefer to to get in like kind of a cheaper way, a cheaper
yeah,
price.
yeah, and
But
again,
it's a great instrument for savings. Yeah.
yeah, I think it goes back to that thing, isn't it, about being patient and waiting for the right areas to buy. I mean, and equally like with gold, you do have multiple opportunities available to you. So as retail traders now, you can like buy through ETFs and sort of like funds and things like that. So I think you know there's multiple different ways to buy gold as well. I mean, just last thing. I know we didn't really touch on psychology too much in terms of we got sort of like through the thing, but I mean from my experience, I think you know the America like in America, people are much more bullish. They're much more open to risk and taking those risks and looking for growth prospects. Whereas sort of in Europe and stuff, it's much more conservative. They're much more defensive, looking for sort of like accumulation and things like that. I mean, what's your view, Eduardo, from a LATAM perspective, like in terms of the way the mindset around approaching sort of like gold investments and the market in general?
Well, here in Latam is it's not very different, but essentially we have to take into account that the buying power, I think is that the purchasing power is lower than Europe. So not everyone can save money on gold or probably just just buy it. Or and also it's a very interesting part. You also mentioned, for example, ETFs,
Yeah,
the access to financial markets, to wide financial markets is something kind of new here. Since pandemic, this uh, uh, wired up for all people, but not everyone is allowed, or yeah, or is capable of listening what to do. So as is not different, I think that the social part, or the social yeah, the social part is what makes it different, you know.
makes it okay. Cool. We've just got a few other questions here from Farik. Asks generally what markets do you usually trade beside gold. I'm not sure how many different markets. I know you're quite focused on gold, Eduardo, if that's right.
Yeah, I focus almost time on gold, but I also look also the Nasdaq, the S&P. And when I trade on Forex, I like the Australian dollar against the Canadian dollar,
Mhm.
because they are both have a lot of financial fundamental data that that really move the market, and also is a pair that move into range
Yep.
most of the time, which is
Mhm.
something very tradable.
Yep.
Yeah,
Okay.
yeah, mostly that. Also
Yeah.
Bitcoin,
Yeah.
also Bitcoin.
Okay, cool. Yeah, so I'm the same. I trade again. I think highly liquid assets. I think is probably the best way. You know, like yeah, your gold, oil, major FX crosses, major indices. I think especially when you're starting out as a trader, I think it's really important to work on those sort of like highly liquid assets. I think it makes it easier to trade. Cost of trading is lower and stuff like that. So I think
Yeah,
they're good ones to start with. Um, I think I can answer this one for both of us. Generally speaking, he said that he asked, "Do we use indicators for analysis?" Um, Speaking before, neither of us really use too many indicators. Maybe sort of like a moving average or something like that, but nothing may like generally speaking. We're looking at the fundamentals to build a big higher time frame picture, and
exactly.
then like a price action to identify the areas and make base our trading decisions on. Um,
Yeah,
what's your favorite trading strategy? Again, I think we've basically gone through that with our analysis. It's like, again, the strategy is more of a theory and then looking for liquidity areas and the right areas in the market to execute trades. And I think um, I don't know about you, Eduardo, but one thing that I always try and get across is the market moves again because of institutional liquidity. It moves
yeah,
because of the area that you're trading in, not because of a particular candlestick pattern. So whilst
exactly.
there are people out there that sort of sit there and say this is a trading strategy, like pin bar off, like trading pin bars or engulfing bars or whatever it is. If you just trade engulfing bars or pin bars and use it as a strategy, you're probably not going to have an edge in the market. But if you use it
Yeah,
as an entry technique around the area. So if you again, you've identified the area you want to enter the market, you exercise the patience that we spoke about for the market to move into that area, and then you see the pin bar or engulfing bar as the entry technique. That's when it becomes powerful, I think.
exactly. It's a sum of all the parts, not only one particular. Exactly.
Yeah, exactly. What time frames do you use to trade? I personally trade mainly off the 1 hour time frame. I used to trade off the sort of like the lower time frames, but I spend less time at the screens now, so I'm trading off the 1 hour. I don't know about yourself, Eduardo. Your generally looks like your top down analysis, so trading sort of like
Exactly.
15 minutes to 4 hour.
15 minutes. Sometimes like 1 minute, but is, only if I'm doing scalping.
Okay,
Yeah.
cool. So yeah, a mixture of time frames, and then for gold, besides daily time frame, do you check sentiment? Do you use other tools like websites, etc.?
Yeah.
Um,
I want to recommend the one that I look the most, which is the
mhm.
FedWatch tool. I'm gonna
Yeah.
share quickly my
Yep.
screen,
Yep. Yep.
for everyone to be allowed to see it. But this one here, where it is, here it is. You only have to type FedWatch tool on Google, and then you can see here, and this comes from the Chicago Mercantile Exchange group, and is like the probabilities, or it can be defined as well as what the market are trying to uh, are the target rate probabilities of cutting, for example, for the next meeting. So this will help you a lot to understand why the price of gold is moving. And this also is based on sentiment, on market sentiment. So, for example,
Yeah,
for the 28th of January, the chances or the probabilities of a 25 point percent, 50%, 50 basic point percent cut is like the 24%.
yeah,
And yeah, to probably to keep rates
yeah,
as in the same level as they put on the last meeting are the greatest. So this
yeah.
will gonna move. So I will suggest you to be looking at this one time per day and see if these have changed.
Yeah, yeah, I agree. I mean, I think it's okay I think it's always prudent to keep up to date with what's going on in the markets and stuff like that. So to give you an idea, equally like I'm generally a believer that a lot of the fundamentals are communicated to you through like the technicals. Like you don't have to read the newspaper to understand that we are bullish on gold, if you know what I mean. Like that at the moment,
Exactly.
if you look at a gold chart, you can generally see that the market is in a bull trend, and we should be looking at buy. The one thing I would sit
Or
there and say
buys.
is
Yeah.
by having an understanding of what is the fundamental drivers, it can certainly allow you to understand when the market is going to shift a lot quicker. Like when those fundamentals change, being aware of that can save you some losing trades in the short term when you understand that the fundamentals are shifting and potentially there's a change in the trend. But yeah, I think it's
Exactly.
always important to keep up to date with the fundamental drivers as well.
Yeah, yeah, yeah,
Okay, guys.
totally. Good.
I think that's all the questions that we've got through, and I know we've run a little bit over, so I appreciate everyone's time for staying with us. Eduardo, it's been a real pleasure having you on the Trading Vault. I really appreciate your time and you giving us your experience and expertise as well. And like I say, I always find it fascinating when talking to other traders, even from different regions such as yourself in Latam, that whilst some approaches are very different, some of the real fundamentals and the cores are very similar. And hopefully, some of you guys can take that away and implement that into your own trading as well to help you improve that side of things.
Well, it was a big pleasure to share this time with you, Ross, and with all our attendees. And yeah, keep synchronizing. And I don't know if that's the correct word, the correct word for this, but keep entering to these webinars that we, as analysts on BT Markets, are happy to give you. And Ross, you're also one of the top. So, my man, thank
Thank
you
you very much.
for
Thank you
for
very much.
for, for having me here.
Yeah, so no, like I say, and hopefully we can do it again another time, and yeah, share our insights again because I feel like there's still so much that we could have covered there as well. But we only had the
I would
hour,
love
so
to.
yeah, appreciate your time, Eduardo. Enjoy the rest of your day, and yeah, I'm sure we'll speak again very soon.
For sure. Merry Christmas for everyone.
Yeah, and likewise. So thank you very much, everyone. You should be able to get the survey for after the meeting as well, and I look forward to seeing you all in the next episode of the Trading Vault in January. In the meantime, I'm wishing you all and your families all the best for the rest of the year and going into 2026 as well. Let's make it a fabulous year trading. Enjoy the rest of your day, and thank you again for joining us today. Good evening, everyone.
Bye bye.